Okay, so I'm gonna show you how to see the markets, because that's the most important thing. Yes, there's a psychological aspect of it, but the psychological aspect of it comes from not being able to see the markets exactly, and that's where a lot of people struggle, is seeing the markets, understanding the moves that they make, and why they make those moves. So what I'm gonna do, I haven't really started trading for the week yet. I'm gonna start tonight. I'm gonna show you how I prep for a trading session. And there's gonna be a few things that you learn that probably have been hidden in plain sight. So let's see here. So we're gonna pick at random. Interesting. That is interesting. Okay. Gonna pick at random, and we're just gonna start charting. All right, looking good now. All right. So Euro British pound. I'm probably gonna be trading London session tonight, and some of the pairs to trade. If you're looking at when you're trading, I'm not gonna go over, look up these sessions, but when you're trading, say you're trading New York session, which is the American session, you want to trade the pairs that play. A lot of people ask me, what pairs do I trade? And for me, I trade what has the volume at that particular time. So for New York, what you would focus on, and I'm not going to use that one, that's not a beginner one. What you would focus on is trading pairs that have the United States dollar in it, the Canadian dollar, and I like to trade silver and gold because that tends to have the most volume during New York session. So that's going to make trading simple. The price patterns are not going to be erratic, and price is going to be pretty simple. It's going to react to its common levels. The London session, and what you focus on is, of course, the Great British Pound, the Euro dollar, the Swiss franc. Swiss franc is usually more stable. So any pairs with Swiss francs are going to be a little bit less movement. But what I like about the Swiss franc is that the movement is pretty structured, just like the economy, the country itself. For Asian session, that's where you focus on pairs that have, the Japanese yen, the Australian dollar, New Zealand dollar. That's what we're going to focus on. So basically, while we're sleeping in here in America, London session is going on 1 a.m. to 10 a.m. Central Standard Time. And for Asian session, that usually starts 4 p.m. and it goes to about almost 1 a.m. Central Standard Time. So here's what I'm looking at, right? If I'm not using any indicators, I can show you how indicators can help out. I'm not using any indicators. What you look for, of course, is the trend. So if the chart looks like it's going from this side to this side, then that's a downtrend. The chart looks like it's going from this side to this side, so from bottom left to upper right, it's an uptrend. It's really simple like that. Now, of course, people don't know how to zoom out or how much price action to consider on the time frames. So one thing that I recommend for people who are new to trading is, using some sort of indicator to determine trend or help you visualize trend. I wouldn't say determine trend, but visualize trend. One thing that you can do that you can be able to have access to on any trading platform is that's going to be the exponential moving averages, or EMAs. And what I like to do is you set one with a smaller length, just to keep it simple. The shorter or the smaller the length, the more it reacts to price, more. So basically, this is a 10 length. So it's a 1 hour chart. You see up here is a 1 hour chart. So this EMA is going to measure 10 hours of price action. So if it's only measuring 10 hours of price action, it's going to react to the current price action more than something that's 100 hours of price action being weighted in. So 10 is going to move faster, 100 is going to move slower. So what I like to do is I set up mine with the 10, and I also set up a second one at 100. For me, I like to make the visualization easy for me to understand and pick up, because that's what you're supposed to use. If you use indicators, that's what you're supposed to use them for, is to help you visualize things, not to make a trade based off of indicator, but to visualize the structure of the markets faster. A lot of people get it confused, and they try to make a trade just off the indicators, and they wonder why their trades are not consistent. So simply, just with these two indicators, these two lines, it's going to simplify trading. So the 10 is green, the red is for the 100. Simple. If the green line is below the red line, that means the red line's on top. So that's in a downtrend. So selling is red, green is buying. So if red is on top, if it's higher than the green line, you're selling. You're looking for sales. If the green line is above the red line, you're looking for buys. That's your uptrend. And I like those two periods, those two lengths, because they tend to follow what's actually happening in price at that moment. So for right now, you're looking at Euro British pound, and you're seeing that it's in a downtrend. So what are you going to do? You're going to look for sales. So now, what I always teach is that when you're buying low and selling high, well, in a downtrend, you have what's called lower highs, like this. So in a downtrend, you're not just buying because it's selling because it's going down. You want to sell at the highest point while the trend is still confirmed. So you want to sell here. A lot of people make mistakes, and because this has been making a move down, they start selling here, then price moves up and they lose the trade. And they start selling here and price moves up and they lose the trade. So if you're selling, you want to look for a high point in the market. Now, if you were to guess, this is where price is currently, do you consider that like a higher point in relation to how price is moving? You think is it a low point or a higher point? Because remember, price moves like this, like a zigzag. So if you think it's at the top of the zigzag, no, it's not. So what I'll be looking for on this is the way for price to simply start moving up a little bit. How high? That's what I'll teach next. But that's the basis of that aspect of things. Now, we're looking at Euro Great British Pound. We're looking for it to go up a little bit. A lot of people ask, they don't know how high, like I said, it's going to go. So one thing that I like to look for is price patterns or price levels, more so. So I'm looking at the markets, and I'm looking for a price pattern, or one thing that I pay attention to is large candles like this, because that's what shows me where interest is. You see these large candles here, even this one with this big wick, and it changed where price is going. I like focusing on those areas. So if I take, these large candles, see how there's two large candles here in this area? So if I take the close of what these large candles are and make a level for it, that gives me that level. It's as simple as that. Now, these are my relatively larger candles. So I'm going to pay attention to the opening and the closing of these candles. not necessarily the consolidation. Now you'll see that sometimes it matches up with consolidation, but I'm looking for the lengths of the candles. You see here, you have the open of this large candle here. So now if I match that up, I have 3 areas in price that bigger moves were either started from or take. Like if a big move ends or a candle ends and price moves the other way, that means whoever was placing that sell or that buy was satisfied at that level. So you want to play with the bigger candles. You want to play with the bigger momentum in the market. And this is something that's not commonly taught, but if you want to catch big moves, pay attention to big candles. So now I got 3 areas possibly where price could bounce off from. Just from looking at those bigger candles, I know it's a downtrend, and now I'm looking for where price can bounce off of. So these levels where price has bounced off of in the past and created or started from, or momentum is started from, those are where you want to pay attention to. So now 3 options, right? So the second thing is, the third thing is you got trend, and now you have your structure points or your high price points, high momentum price points, is you're looking for to see which level is price going to take. So now this is where you would wait for a reaction. So what you're looking for, let's see here, let me see if I have something recent I can use. Okay, here. So what you're looking for is something like this, where price will come up like that, and then start to go down. So if I do this right here, it'll start to come down like this. So if I zoom in on here, you have price going up. If I was to, I guess, illustrate it so it could be a little bit easier to see, price going up like this, right? Say it doesn't pay attention to that level, but it continues to go up. Make all these green. So prices, that momentum is going up. Are you selling when the momentum is going up? No. You want the momentum to start going back in the direction that you're looking to trade. A lot of people, they'll just catch, especially in the beginning. Now, once you become more advanced, you kind of have an idea, even if momentum is still going one way, that price is going to start going another way. But in the beginning, when you're trying to understand this, you want to wait for price to tell you it's going to do it, because you won't have the eye to discern if price is going to do it or not. So you want to wait for price to make that move. And now when you start to see that it picks a level, and then you start to see that momentum start shifting the other way, and that's when you place your trade. And like from here, even if it got up that high, the green line is still going to be below the red line. So that trend is not changing. It's not confirmed to have changed yet. Now, say if it went up here, probably it would cross, and I don't really trade it if the trend crosses or the trend changes. And not because these 2 lines cross, is because if we look at, make sure this on, if we look at here, right? Let me zoom back out. And here's another thing that'll help out too, especially in the beginning. If you're on TradingView or your MetaTrader, you use zigzag, but if you're on TradingView, you want to use this one, zigzag high-low. And you see, let me make it a little bit thicker so you can see it. It's not going to let me make it thicker. Okay, that's fine. If you go back to this level here, you see how this level was a high? Remember, downtrends look like this where you have lower highs. So as long as the next high is lower, that downtrend still exists. So say if price got up to this level, would this be higher than this high? The answer would be yes. So now, because you don't have a lower high, you're not truly in a downtrend. That's why you trade within structure. Now you see, like if you were to kind of project this out, right? These two lines. If price was to go up, this line would start to do this. And this line would start to maybe do this. Now, price got up to this level, those lines would have crossed here. It would have crossed somewhere in this level or that area. That's higher than this high. So that trend has been broken, not because this crossed, but because price closed higher than the last high. And that sell trend would have switched to a buy trend. It's just mathematically, these two EMAs happen to cross when that happens. So don't get it twisted just because this cross means the trend change. Make sure that your high or your relevant low hasn't been broken. So for me, considering that, this square would be out for me. So this level, I wouldn't pay attention to, because it would have broke my rules if it reached there. As far as a sell trend or a buy trend, it would have started being a sell trend. This is very simple. These are 3 indicators. You can do this with a free account on TradingView. Just 3 indicators, and you're not trading based off the indicators, but it's helping you visually see what you're supposed to see without indicators. That's why you use indicators. You don't trade just off of what an indicator says. So if I'm looking, I'm either looking for this to happen here where price bounces off of that and moves back down, or if price starts to break it and shows me a good break and comes back to it, then because trend is shifted, I'm gonna look for a buy, and that would be a good area for a buy. So let's move this out the way. All that would be a good area for a buy. So it's as simple as that. So now that you have an idea of how I'm looking at the markets, let's look at some other markets. So remember, I'm prepping for London session. So pairs I'm looking at, most likely going to have the Great British Pound and Euro, or European dollar, the Euro. So let's start with one of the Euro pairs. So we're seeing here that, use that same analysis. Let me take this off because I don't need that. You see that your bigger candles are here, or in this area. So you have this candle here, these bigger candles around. You got that candle here. You're looking for the down, because you're looking for, the reason I'm looking at down candles because in the downtrend. Or this candle here, you can kind of combine that since they happen back to back like that. So for me, the open, where that open would be an area for me. So if I do, and then where this close would be an area for me. So you see how you had 2 bigger candles. Yeah, a lot of momentum closing in that area. So that would be where it closed. So for me, I'm looking to see if price is going to start going back down in this area. Is it going to start going back down? It hasn't confirmed that. It's testing it now. Or in this area. It start going back down in this area. If it gets above here and does this, I'm looking for a buy, possibly to the next area. See where this candle is? Now, when you're looking for buys, you're paying attention to the buying candles, the big green candles. So, this area here where that opened, and this area here where that closed. Oh, wrong thing. Those are my levels that I'm playing off of. Let me see if I can get rid of these so it doesn't confuse y'all. Those are my levels where I'm playing off of. And people are like, this is kind of controversial. But if you really look at where price is really reacting from, people is going to go here and say, oh, that's it, because you see all this consolidation. Oh, that's where the high area is. No, it's where the candles play off of, the bigger candles, where they open and close, or more. I more pay attention to where they open, because that's where the order was opened at. That's where that trade started. But I look at both opening and closing of big candles and where they like to end up at. And if I was to put a line right there, you go back. Let's see. No. There we go. And you go back, you'll see that price reacts from those zones. And you all this time you've been thinking, oh, because it's consolidation, that's where price is strong. No, it's not the consolidation. It's the candle. That's the secret hidden in plain sight. So I'm going back, see how price is cleanly reacting from that. And a good zone, here's another side note. A good zone if it takes a strong candle to break the zone. You see how it took a strong candle to get into that zone? And see how it took a strong candle and this candle to break it? So if a structure or a zone is broken, pay attention to the candle that breaks it. Is it a strong candle? If it is, that really broke a structure because it took momentum to get out of that zone. But you see, I continue to go back. You see how price is cleanly following in that structure. Even from back here, price is still following it. Secrets hidden in plain sight. This is what this is about. So I hope people are getting value from this. So I'm gonna do one more pair. Let's do a popular pair. It's the GBP USD. It's a popular London session pair. So look, we're looking at buys right now. Looking at buys. So I use that same methodology, right? Where are my significant buy candles that are close to what I'm looking at? I see this candle. I see this candle. See how their opening prices are in a same area. See this candle. So let's select them, right? See how this candle is significant when you just take a glance. Like, what are your bigger green candles in this area? See this one here. Your bigger green candles. So let's just do the top two, which are these candles, right? Let me get rid of that. Look at their opening prices. Let's just opening prices for here. For that candle's there. Opening price for this candle is literally the same level. The opening price for that candle's there. You see 3 big candles in a relevant amount of time that have the same opening price. Same opening price. That's a good level to play out that price to play off of. Now let's look at current price, or underneath where current price is. Candle that jumps out is this candle. So if I take, I really like the opens more than the closes, to be honest. So if I just take the open of that candle, that puts me there. So what am I looking at? Well, I'm hoping that price gets to, where's my thing? There it is. overnight price gets to this level and bounces up. That's it. So, pay attention to that. Practice that.